Let's bring in Rich Greenfield. He's analyst at BTIG, who thinks he can basically do this with his eyes closed. Roll the promo, get out of there.
There he is. He comes to play.
There we go.
Comes to play. Bird Box in the house.
Let's do it.
All right, what do you think? We should have made you leave that on.
You got to do the whole thing. The whole time.
No, come on.
Answer the questions with it on.
We got newspapers on the walls. We're okay.
You know, Netflix has pulled back a little bit today, but that's also after a huge run-up that we saw leading into this. What did you think of what you heard yesterday on the call?
I think what was amazing, Becky, was when you look at the fact that this company now is at 60 million U.S. subscribers. There's a great global growth story, but in the U.S. alone, they had their best net ad year since 2013, when the company was less than half the size of subscribers. So, you know, it defies all logic. I mean, this was, you know, HBO started struggling to grow subs after getting to 30 million subscribers. This company is accelerating at 60 million subscribers. It sort of defies logic, and I think, you know, or at least historical precedent, and I think the core driver of this, consumers love the content. And I think what you like and what I like may be different. Andrew's favorite show may be different. Mike's favorite show may be different. But there's so much content, and the price-value equation is just so compelling. Even at $13.
It's me. It's what the content I love, my husband, my kids, they're all watching different things, and this thing's smart enough to figure out what to pitch to each of us.
Correct. And they're getting you more and more engaged. And for $13, I mean, my Charter set-top box costs more per month than Netflix costs.
But I do think even everybody having their own individual profile, so that it's pitching you and only what you want to see on all of those things. How do others catch it? Or can they?
Look, the internet, as I think all of you have known for a long time, the internet seems to be winner takes most. There'll be lots of opportunities for others. You're going to see, I mean, Amazon obviously has some very good programming. I love Mrs. Maisel. I think it's fabulous. I think, you know, if you look at Hulu, Killing Eve crushed it at the Golden Globes. I mean, you're seeing lots of other players here. There's just one dominant player in Netflix, and they're getting bigger and bigger. And I think the price increase is not about driving more cash to the bottom line. They told you free cash flow is going to be just as negative this year. That price increase is for one reason.
More content.
Give you more of what you like.
But here's the question. So this has been great for customers. It's great for content creators. When is it, and I think it was really Mike's question to some degree.
Sure.
When does it ultimately benefit the shareholder?
Well, the shareholders obviously made a lot of money in this stock.
But in terms of the money coming back, in terms of profit.
You know, look, you know, there are industries. You know, let's take Comcast, the owner of this entity that we're sitting in. Comcast ran at negative free cash flow for well over a decade, right? I mean, cable industry had very high capital expenditures, had, you know, negative
those were physical.
But I'm just saying. Okay. They had negative free cash flow for a long time, and yet you were willing to make a bet on Comcast, and it worked out very well for the Roberts family and for public shareholders.
Part of that was that they were laying down the train tracks. And the question is...
And they had exclusivity in certain geographies. But
this is exclusivity of content, right? The only place you're going to get Bird Box, the only place you're going to get these shows that they're producing is watching Netflix. You can't get Stranger Things anywhere other than signing up for Netflix. And so there is something that you can't get elsewhere. And I think it's why the company has made a big shift from licensing other people's content. Right. Obviously, shows like Friends and The Office are still important, but there's been a major shift over the last 24 months to move into original production. And again, people seem to like it because they're watching more and more of it.
How long or short are you then the other efforts, meaning what we're going to be seeing from this Warner Media package, what Disney's ultimately going to show up with, if people are so addicted to their Netflix, and if the number is going up?
Comcast is doing this going to be free.
Comcast is going to do it for free?
Well, free for cable subscribers and satellite subscribers. Look, I think the reality is that people want to stream. The core takeaway that you're seeing from Netflix, from the growth of Roku, people love streaming. They want to watch on demand. They don't want to get home at 8 o'clock and have to tune into a show. I mean, just look at the numbers on this show, You. It was a Lifetime show. You probably remember it or don't remember it, but it was on Lifetime last year, co-production with Warner Brothers. 600,000 people watched an episode. Netflix said last night, and this is global versus U.S., but 40 million people have watched at least one episode of this show on Netflix in just the first 4 weeks. So I think it's showing you people don't want to watch entertainment programming in a linear fashion. They want to watch it on demand.
This is what the internet is doing to every industry. And look at Amazon.
Right. Sure.
And so what you want, where you want it, how.
But I want to answer the question of there's room for multiple players.
Right. Yeah.
There's going to be an opportunity. The question is, can anyone be as big as Netflix? That's going to be very, very challenging. And it really comes down to Disney, right? Disney has incredible content, right? Like they're coming out with Avengers Endgame, but they're putting that movie into the theaters. Then they're putting it out on DVD and iTunes, and then it'll get to Disney Plus at some point later on. if they were willing to really, go for it, and really this innovator's dilemma, and just put all of their content onto Disney Plus right away, they would be hugely successful. It's this classic innovator's dilemma of where they're scared.
Hugely successful in terms of being able to get people to come to you, but would the profit match what they do now?
Nothing will ever be as good as the legacy cable business is for profitability. I mean, think about it. 85 million people paying for ESPN, and the vast majority don't watch it, and they spend $9 a month for ESPN. There'll never be a business as good as that.
When Netflix, though, it's amazing because I love looking at a chart of subscriber growth, and it's this perfect linear thing going up to the right, and then you look at the stock chart, right? Mm-hmm. So in the last year, it's gone from 220 to 420, back down to 220, and now it's up in the mid-threes. So what is the market right now believe, and how fast can Netflix get?
You have to have a strong stomach to own this stock. There is no doubt. I mean, you are betting out, you're looking out 3-4 years to get comfortable. No one would buy it on current year earnings and cash flow. You have to believe. And so every little data point, every little sentiment change, whether it's related to competition, whether it's related to their own international rollout, all of that matters.
Is there anything that would make you change your bullish take on Netflix? Is there
Well, obviously, subscriber growth changing from accelerating. So sitting at Squawk Box a year ago, we were forecasting 21 million subscribers globally for Netflix for 2018. They just reported yesterday, 31 was the number. So they keep meaningfully exceeding expectations. So if you saw the reverse of that, meaning continually missing expectations and the growth slowing, that would be a problem, especially if they couldn't raise pricing. But right now, they're accelerating subscriber growth and raising price. And then the other piece would be competition. So if I saw Disney turn around or Comcast turn around and start collapsing windows and really start going day and date, not putting new entertainment programming on NBC and ABC and putting it right onto their streaming services, that would definitely make you change your view.
If you saw them buy into sports in a big way,
Netflix,
would that be a positive in your view?
Well, first of all, they don't have the cash to do it. So it's just technically, from a financial standpoint, not possible today. They don't have a balance sheet. They're, levered enough going into entertainment programming worldwide where they can't. I think at some point, though, the question becomes, they're going, they talked about 2020 as the beginning of the free cash flow inflection point. What's the next big thing after they conquer, assuming they conquer international and we're all watching hours a day, the only next big area to spend money on in 2024, 2025, you could imagine could be sports. And so, yeah, if they did it today, I'd be panicked. If they did it in 2024, 2025, we'll see. It could be very interesting at that point.